The SpaceX squeeze and the expiration dates. The financial world witnessed history on June 12, 2026, when Space Exploration Technologies Corp officially made its public market debut, 2/5. Launching at an initial public offering, IPO, subscription price of $135 per share, intense institutional and retail demand shot the stock past $200 in its opening days, pushing its market capitalization toward $2.65 trillion, 2.6. To the casual observer, the explosive post-IPO momentum looks identical to a retail-driven meme stock rally. However, an examination of the underlying mechanics reveals an entirely different financial phenomenon. The vertical trajectory of SpaceX, $SPCX, is not being driven by internet forums. It is the result of highly sophisticated financial engineering, precise index inclusion rules, and a carefully timed, rolling supply calendar designed to transfer liquidity from passive index funds straight to early corporate backers. 3.4. Phase 1, the June ultra-scarcity bottleneck. To understand why the stock price is experiencing such intense upward velocity right now, one must look at the intentional friction between supply and demand designed directly into the first 30 days of the listing. 1. The microscopic initial float. SpaceX went public by offering a public float of only about 4.2% of its total shares, consisting of 555,555,555 Class A common shares. 2. At the current market price of approximately $180 per share, as of June 18, 2026, this translates to a circulating public float of approximately $100 billion. 6. Key distinction on market capitalization: the $100 billion figure represents only the publicly tradable Class A float. SpaceX's total multi-class market capitalization, including Elon Musk's locked Class B supervoting shares and all other non-public tranches, implies a total share base of roughly 13.1 billion shares across all classes. 2. At today's price of $180, that equates to a current total market cap of approximately $2.36 trillion. At the post-IPO peak of $210, it briefly touched $2.65 trillion, the figure cited in the opening paragraph. These figures fluctuate with the share price. What does not change is the structural constraint: the publicly tradable float remains under 5% of the total share base regardless of price. These two figures should never be conflated. The $100 billion is the supply available to the market, the $2.36 trillion is the company's total current implied value. For a multi-trillion-dollar corporate entity, this represents an extremely constrained level of public liquidity. 3. 2. Wave 0A, Russell 1000 Fast Track Entry, eligible June 18, effective June 26. Contrary to what many early analyses assumed, the first major index buying wave does not come from the Nasdaq 100. It comes from FTSE Russell, and it arrives well ahead of the Nasdaq 100 deadline. Following a market consultation in February 2026, FTSE Russell confirmed on May 26, 2026, that it would implement a new fast entry rule for the Russell US indexes with immediate effect. 8. Under this rule, any IPO with an investable market capitalization above the Russell Top 500 breakpoint, currently $17.5 billion, is added to the index after the close of trading on the 5th trading day following listing. 8. SpaceX clears that threshold by orders of magnitude. Two distinct dates matter here. Accounting for SpaceX's June 12 debut and the 4 subsequent trading days of the holiday-shortened week, June 19 was Juneteenth. SpaceX met the 5 trading day eligibility requirement after the close on June 18, 2026. 9. However, FTSE Russell's formal published index notice sets the effective inclusion date as June 26, 2026, the date on which funds tracking the Russell 1000, Russell Top 200, and other Russell US indexes are actually required to hold SpaceX. 8. 9. The combined FTSE Russell and CRSP inclusions around this window are estimated to trigger $10 to $16 billion in forced passive fund buying. 9. This wave of buying arrives 2 weeks before the Nasdaq 100 rebalance and before most retail participants have positioned for the July squeeze. 3. Wave 0B, MSC entry, June 29. MSCI admits qualifying IPOs after 10 trading days under its own fast-track rule, making SpaceX eligible for MSCI US and MSCI World Indexes around June 29, 2026, 10. MSCI tracking funds manage an estimated $15 to $20 trillion in AUM globally, though SpaceX's small float-adjusted weight means the forced buying is modest relative to that headline figure, 10. 4. Wave 1, the NASDAQ 100 squeeze, July 2. Effective May 1, 2026, NASDAQ altered its index methodologies, allowing top 40 ranked companies by market capitalization to achieve fast-track inclusion in just 15 trading days instead of waiting a traditional seasoning period, 3-11. Furthermore, NASDAQ's new weighting algorithms eliminated minimum float requirements, allowing low-float stocks to receive an adjusted weighting multiplier of up to 3 times their actual float, 3-11. Because of this rule modification, passive index funds, such as the Invesco QQQ Trust, are legally mandated to purchase an inflated dollar amount of SpaceX stock to match the index benchmark, 3. Counting 15 trading days from the June 12 IPO, and accounting for the June 19 Juneteenth holiday and the July 3 full market closure, Independence Day falls on Saturday, July 4, so the observed closure is the entire trading day on Friday, July 3. The effective NASDAQ 100 rebalance execution date falls at the market close on Thursday, July 2, 2026, with SpaceX becoming active in the index on Monday, July 6, 11-12. Per the standard NYSE and NASDAQ pre-holiday convention, July 2 is a scheduled early close day, with trading halting at 1 p.m. Eastern Time, confirmed by Kiplinger, FinWiz, and multiple exchange sources, 12-18. The entire multi-billion-dollar rebalance, typically executed via market on-close, MOC, orders in the final minutes of the session, must therefore be compressed into a 3.5-hour window ending at 1 p.m. Eastern Time. These tracking funds are forced to load an estimated $15 billion to $27 billion worth of shares in this narrow window, 3-13. Because the available float is structurally restricted, passive algorithms are forced to aggressively vacuum up a significant portion of all publicly tradable shares in a matter of hours, triggering an intense upward price squeeze, 3. Note on the dollar range, the wide spread, $15 billion to $27 billion, reflects genuine analytical disagreement. Conservative estimates use SpaceX's unadjusted NASDAQ 100 weight of 0.47% to 0.70% applied to $1.4 trillion in tracking assets, producing roughly $7.10 b. Higher estimates, 13.3, apply the full 3x float multiplier, pushing the effective weight toward 2.6% and the forced buying figure toward $22.27 b. Both methodologies are legitimate. The outcome depends heavily on how index providers apply the new multiplier rules in practice. Phase 2, the early release shock valve. The structural purpose of this compressed, multi-wave buying sequence becomes clear when examining the final prospectus's staggered early release lockup schedule, 4. 1. The Q2 earnings performance booster. The standard post-IPO insider lockup rules do not apply uniformly across the board. While Elon Musk's personal block of 5.5 billion Class B shares is locked tightly for a full 366 days, a 4.7 billion share pool held by employees and early venture backers is subject to staggered liquidity windows, 2-4. The underwriters structured a conditional escape valve immediately following the release of the company's first public Q2 earnings report, expected in late August 2026. An initial 20% of this eligible employee block unlocks early, 4. However, because the stock is trading well over 30% above its $135 IPO price, a performance-based release clause is triggered, bumping that first unlock up to 30%, 4. 2. Injecting $253.8 billion in new supply. When that 30% trigger fires, 1.41 billion shares are suddenly freed for trading, 4. At the current market price of approximately $180 per share, as of June 18, 2026, down from post-debut highs near $210 but still 33% above the $135 IPO price. This injects approximately $253.8 billion in potential circulating supply onto the tape, for 6. This completely shifts the market dynamics. The float scales from 4.2% to 15%, adding 1.41 billion unlocked shares to the original 555 million share float expands the circulating pool to nearly 2 billion shares, 4. The handoff. The market transitions from an artificial shortage in late June and early July to a massive influx of supply in late August, 4. This allows early insiders and employees to cash out directly into the massive pool of buying liquidity generated by the index inclusion waves, 4. The critical roadmap, key dates to watch. The life cycle of the SpaceX trade is dictated by this rolling calendar, moving from maximum squeeze to structural dilution. June 12, IPO, June 18, Russell eligibility/CRSP, June 26, Russell effective inclusion. June 29, MSCI Wave 0B, July 2, QQQ Wave 1 peak squeeze/early close. July 6, SPCX active in NASDAQ 100, late August, Q2 earnings/$253.8 billion unlock, December 8, full cliff. Date/timeline. Milestone event. Market impact and squeeze mechanics. June 12, 2026. IPO launch day. Stock debuts at $135. Immediate frontrunning begins as active funds accumulate inventory ahead of index inclusion. 5. June 16, 2026. Options market go live. Standard options launch. 4. High implied volatility inflates premiums. Ultra-long leaps extending to December 15, 2028, are listed but experience a temporary ghost chain with zero bid/asks as market makers wait for stability. June 18/June 26, 2026. Russell 1000 entry, Wave 0A. First mechanical wave. SpaceX meets FTSE Russell's 5-day eligibility threshold after close on June 18. Formal effective inclusion date is June 26 per FTSE Russell's published index notice. Russell 1000, Russell Top 200, and related benchmarks begin automated accumulation. Combined FTSE Russell and CRSP buying estimated at $10, 16B, 8, 9. This wave precedes the NASDAQ 100 deadline by over a week. June 29, 2026. MSC entry, Wave 0B. MSCI US and World Index funds begin accumulation. Large AUM base but small per fund weight given SpaceX's low float adjusted market cap, 10. July 2, 2026. NASDAQ 100 rebalance execution, Wave 1. The peak squeeze. Day 15 of the fast track window. QQQ and passive NASDAQ funds execute market on close, MOC, orders, legally forced to buy an estimated $15.27B in shares, 3.13. Per standard NYSE/NASDAQ pre-holiday convention, July 2 closes early at 1 p.m. Eastern Time, 12:18, compressing the entire rebalance into a 3.5-hour session. July 6, 2026. SPCX active in NASDAQ 100. SpaceX is officially a live constituent of the NASDAQ 100 index as of Monday's open, 11. Late August 2026. Inaugural Q2 earnings and first unlock. The scarcity break. First public earnings drop, 4. The 30% early release trigger activates, flooding the market with approximately $253.8 billion in new circulating supply, 1.41B shares times $180 current price, for 6. September, November 2026. Rolling supply drips. Additional 7% insider tranches unlock at designated intervals, days 70, 90, 105, 120, and 135 post-IPO, continuously diluting the scarcity premium, for December 8, 2026. 180-day traditional cliff. The official traditional lockup expiration. 100% of all remaining non-executive shares are fully freed, completely removing early supply restrictions, 3-4. Mid-2027. Musk unlock and S&P 500 window. Elon Musk's personal one-year lockup expires, 2. Concurrently, SpaceX becomes eligible to be considered for S&P 500 inclusion, but only if it achieves 4 consecutive quarters of GAAP profitability. The S&P Index Committee formally declined to alter its strict seasoning and profitability rules, rejecting a fast-track proposal on June 4, 2026, 14. Corrected forced buying summary. The table below corrects 2 material errors from widely circulated earlier versions. 1. Russell 1000 inclusion was incorrectly placed at the September or December reconstitution. FTSE Russell's new 5-day fast-track rule made SpaceX eligible on June 18, with effective inclusion on June 26 per the formal index notice. 8, 9, and 2. S&P 500 inclusion was framed as a near-term possibility via a profitability waiver, a waiver that S&P Global explicitly rejected on June 4, 2026, 14. Index/fund type. Estimated forced buying. Actual trigger window. Russell 1000 and Russell Top 200. $10B, $16 billion. Eligible June 18, effective June 26 per formal FTSE Russell Index Notice, 8, 9. MSC US/World. $5B, $10 billion. June 29, 10. NASDAQ 100, QQQ and trackers. $15B, $27 billion. July 2 close, early close day, active July 6, 11, 12, 13. S&P 500, SPY, VU, IVV. $0 in 2026. Mid-2027 at earliest, requires GAAP profitability, no waiver exists, 14. Realistic 2026 total. $25B, $47 billion. Full inflow horizon through end of 2026. The frequently cited $70.85B total figure implicitly includes S&P 500 forced buying as a near-term event. It is not, 14. Stripping it out brings the realistic 2026 total to $25.47B, still a historically extraordinary amount of mechanical buying concentrated against a sub-5% float, but materially different from the higher figure. The investor's takeaway. The inclusion of the staggered early release clauses completely redefines the risk profile of $SPCX, 4. Traders looking to ride the momentum have a highly visible, technical window right now, with Russell 1000 buying already underway ahead of its June 26 effective inclusion date, 8, 9, MSCI accumulation beginning imminently, 10, and the compressed QQQ peak squeeze arriving on a shortened July 2 session, 12. The index mechanics are real and the timeline is accelerated. However, treating SpaceX as a long-term hold based on permanent scarcity is a dangerous assumption. By late August, the supply dynamics shift dramatically, 4. When $253.8 billion in fresh employee shares hit the tape, the artificial float restrictions will evaporate, and the stock will finally have to justify its multi-trillion-dollar valuation based on raw earnings performance rather than index rules, 3, 4. That is a harder test. The XAI unit lost $2.5 billion in Q1 2026 alone on capital expenditures of $7.7 billion, 15. However, SpaceX has moved aggressively to offset this burn through a neocloud strategy. Per the IPO prospectus, Anthropic agreed to pay SpaceX $1.25 billion per month through May 2029 for exclusive access to the Colossus 1 GPU cluster, a deal worth over $40 billion in total contract value. 16. A second agreement with Google adds $920 million per month from October 2026 through June 2029 for access to approximately 110,000 NVIDIA GPUs. 17. Together, these two contracts generate a combined $2.17 billion per month in cloud compute revenue, providing a meaningful structural offset to xAI's operational losses, though both agreements carry 90-day mutual termination clauses. 15, 16, 17. Bulls will point to these contracts as evidence that xAI's expensive infrastructure is now productively monetized. Bears will note that the combined neocloud revenue still falls short of xAI's annualized capital expenditure run rate, and that 90-day cancellation clauses make neither deal a permanent fixture. The mechanical buying story is real and well documented, but it has an expiration date, and the fundamental case remains contested. This article is for informational and analytical purposes only and does not constitute financial, investment, or legal advice. Capital markets involve substantial risk, and past structural performance or index mechanics do not guarantee future stock price results. References.